All right, all right, all right. Got it. Yes, welcome back. I do apologize. Yes, we do have at times tech issues that come up it's never planned for. However, it happens. So it's the synergy again. It's a pleasure to have you here again. It's Dr. Okay, and my goal really is to help you debunk all the jargons around insurance to help you understand why it's important for you to have your families and businesses covered, right? Yes, and yeah, I'm excited about my upcoming book, the book on insurance, how to protect yourself, family, and businesses against financial misfortunes. You know, it's important for us to um, make sure that we cover our risk, right? So today, part of the things that we've really been talking about during my consultations about what's important to do when your insurance policies actually do go live, especially when it's life insurance. Now, income protection, you do not need to have it in trust because income protection gets paid to you while you're alive. And in most cases, also critical illness cover gets paid to you while you're alive. So the element of it is if you have life and kick. So the element of it that you may want to pass on to your trust is the life insurance bit. So critical illness cover really, if you're claiming while you're alive, in case diagnosis of cancer, heart attack, all those the stated critical illnesses, that pays to you so that you can have funds to take very good care of yourself fast, and also to make sure that all your bills are covered while you are trying to get back in health, because that's what it's all is. Critical illness cover critical illness does not always kill, right? But what you need to do is have funds around to get access to good diagnosis, fast diagnosis, quick treatments, and all of that. Now, but let's focus on the life insurance and how you can save your family 40% on inheritance tax. Now, inheritance tax in the UK is law, right? And there's a threshold in which you do not pay, your family members do not pay anything on, and that's roughly about £325,000 pounds right now. It may change in the next future. I don't know when you're going to be watching this video, right? But right now, as I'm speaking to you in 2023, it is still that amount. It's called a nil rate band. Anything above that attracts taxes, which is roughly about 40%. Okay. So how can you that have a life insurance life now, how can you protect your family from having to pay that? That's what all trust is all about. So when we set up trust, it's like an entity that is different from you. So when anybody passes on in the UK, so when anybody dies in the UK, everything that you have, kind of like money in the bank, your stocks and shares, everything that you're worth gets added together, all right? And your family will be liable, may be liable, it depends on how much it is, may be liable to 40% inheritance tax. Now that takes time for the probate to be granted. For at times, people are still waiting 2 years for the inheritance, to be able to claim it, because there are different processes and all of that. However, trust is an entity on its own. That means that, so if you have your life insurance and it's already live and there's a lump sum money to be paid out, trust is like a will for your life insurance payout. So it gives you an opportunity to be able to state, this percentage goes to this person when I'm not here again. So you're kind of like giving an instruction while you're alive on how your estate is to be, estate as concerning your life insurance, how it is to be managed. So wills takes care of every other thing, but trust for your life insurance actually takes care of that amount that is going to be paid out after you're dead, because that's what life insurance is. Make sure that your family is financially protected when you're no longer here, right? So that could be. And then another thing that I need to debunk is this: it does not have to be your children or your spouse only. In fact, maybe you have a church that you want your life insurance, a percentage to get paid to. There's a portion of that you can say this percentage goes to this person. Now, so let's talk about how the things that you need to understand, the lingua that comes out of trust. So the first thing is settlor. Now it looks like a big word, but settlor is just you. You are the one that's putting that life insurance in place. And so that you are the settlor. Okay, you are the one determining this is the way I want this to be taken care of. And then second one is trustee. Now, this is the way I make people understand trustee. The people that you can trust with money. All right. So because you're no longer here to be able to administer that. All right. So when you're the people that you're going to use as your trustee, and it's advisable that you use between 2 to 3 people as trustee, right? One person, for example, let's say a married couple, and maybe you use your wife. So if you're the man, use your wife as a trustee, right? But what happens if you actually died on the same day? What's going to happen to that? There's no other person. So that's why I say it's a safe bet for you to have like 2 people minimum as trustee on your trust. Okay. Now, trust, setting up a trust, I can do that for you. It's free for me to do that. In fact, I make sure that all my clients, once your life insurance goes live, that I send you the trust form and I walk you through what you need to do, set it up, because you know what, it's a free service, right? It's not costing you anything. So if you're watching this right now and you have a life insurance that's already live, right? And you have never heard of trust, or you don't have it in trust, or maybe you've been asked to do it but you never did it, then you need to speak to me. So send me a personal message or send me a text on +447411857200. You can also check me on that. All right. So that's, so we mentioned 2 things. So 1, settlor, you are the settlor, you that own the life insurance. 2, trustee, people that you trust with money, because you're going to mention that these are the people that want this to go to if I'm not here. So it's a trust, is a legal entity on its own. It's like a corporation. I don't know what else to use. So it's like a person. So whatever payout goes out does not go to your estate where it's part of, they have to be granted probate. I don't want to go through, so we'll use another session to talk about what happens when you're dead. All right. So that's a big topic on its own. So let's talk about, so we mentioned settlor, you are the settlor. Trustee, people that you trust in money, you need at least 2 on your form. And then the 3 is beneficiary. Okay, beneficiary are the people that you're going to mention on your trust that, okay, so I've got £100,000 in life insurance. All right, 50% goes to my wife. All right, 20% goes to my firstborn. All right, another 15% goes to my second child. So let's say you have 2 children. And then the third portion of it, so that's like 50 plus 35, right? So it remains 15%. 15% goes to my church, and you name the church that you want to, or you name your favorite charity, or you name your mosque, or anybody that you actually want this to go to. It could be a niece, it could be your parents, people that you actually want a percentage to go to, and all the percentage must add up to 100%. If it's more than or less than, your trust will be returned to you. You have to redo it. Okay. All right. You have to redo it. So it must add up to 100%. So you don't need to say, oh, 60,000 goes to this person. No, it's just in percentages. It's already there. All right. Also, and there are lots of types of trusts. I'm just going to mention 2 today. There's the absolute trust and there is the discretionary trust. When it's an absolute trust, right? I don't want, like I said, I don't want to bug you with too much like English. However, there are things that you need to know. Okay. So when it's discretionary trust, it means that that's discretion. Okay. So no, sorry. First one, absolute trust. It means it doesn't change. This is my will. This is what I want to happen to this amount. These are the percentages I want to go. And throughout the life of that trust, it does not change. It's an absolute. So when you set it live today, you can't change your mind. So you can't say, oh, I had a fallout with this son, I had a fallout with this daughter. No, you do not get anything out of my life insurance. It can't happen if you have an absolute trust. The second one is the discretionary trust. So discretionary trust actually allows a bit of more flexibility. You can change your mind. Also gives some power to the trustees to be able to determine some of the things that can happen to the percentages that you want to go out to, who you specified at the time of the payout. All right. So we've discussed that. So 3 things. 1, know that settlor is you. So when you see all the words or the trust form, don't get, oh, what is this? That's just simply settlor is you that's set up the life insurance. Okay. The trustee are the people that you trust with money. So I would say maybe closest friends, people that know your children or know your family, and they are reachable. I recommend If you're in the UK, for ease of administration, let all your trustees be UK residents. Now, you can do it differently, but that's my recommendation, that because I'm speaking to you from the UK, right? I'm licensed to help you with your life insurance and all the income protection and your business protection in the UK, right? So when you're choosing who to trust with money, who are your trustee, I'll recommend use someone that is reachable in the UK, all right? So they're going to ask you for their address, and then the fourth thing I want to mention is the witness. Now, who can be a witness? Your trustee cannot be a witness to that trust. Your beneficiary cannot be a witness to that trust. You, the settlor, cannot be a witness to that trust. So for you to have one person, because you need a witness to witness all of this, right? Meaning when you sign, one person will stand as the witness, okay? So that witness must be independent of your family influence, if you get what I mean. So it can be a neighbor, it can be a friend, right? But somebody that is not part of the trustee beneficiary arrangement. So it needs to be independent. So when you're getting your witness for your trust, get someone independent of all of this. Because if you, let's say, for example, you have a child that's already 18 years and above, and say, oh yeah, you're beneficiary, and also you can sign in as trust. No, it will be returned to you. So note that. All right, what else can I say? Okay, so who do you name on your trust is entirely up to you. Like I said, it can be spouses, it can be children, you know, it can be your favorite charity. So different people, it doesn't have to be like family only. So it's entirely up to you. Choose who you want it to go to. All right. Then another thing that I wanted to mention in this when it comes to trust is, right, you don't have to do it. But you know what? I recommend you do it. Okay. Some people say, oh, this headache, all this signing and everything. I don't like to do paperwork. Trust me, when you are no longer here, it's going to give your family a lot of headache if you don't have it sorted out now. So do you want some for all? You can still change your mind when you use discretionary trust. So I recommend use discretionary trust, okay? Just in case you want to make changes along the line. Okay, now let's now talk about beneficiary and trustees. Now, when you have a child that's 18 plus, right, they can also be part of the trustee and still be a beneficiary. Okay, so let's say, for example, myself, my son is a beneficiary on my trust. Okay, however, because he's already 18 plus and I've taught him to be very, very responsible, which I think as parents is also one of the big challenges, you know, that we must face and make sure that we deal with, that when we have our children, let's teach them and coach them to be responsible with money, right? People will say, you know, my father didn't give me anything. Why should I bother to do any life insurance? You know, when I'm gone, I don't care, whatever they do. No, that's not the way to think, right? Because I'm here, because I know what I know, the next generation needs to be better, right? So when I'm leaving stuff for my children, or when you're leaving things for your children, for the next generation, it's not because they won't be a good steward of the money, because I expect that right now you're coaching them and training them. So it's supposed to just add to whatever they're doing and make it better. So let's say, for example, you have £1 million in life insurance, pays out to your children. It means that they can add part of it to their working capital, that whatever time it is, it can only get better. So don't be selfish with your thoughts, saying, because my parents didn't do it, I won't do it. So don't do that. Don't do that. You're better than that, right? All right. So your beneficiary can also be part of the trustee. All right. Like I said, 2 trustees minimum is advised, right? Just in case things happen. It's also advised that when you're using trustees, if you're in the UK, you live in the UK, try as much as possible to have your trustees in the UK. Can you use other people in other nations? Yes, you can. It's just that for ease of administration, I may recommend that you do that. All right. Okay. All right. So I think that's just about it. And why do you need to go through all this headache now? I say that it's so, like, when anybody passes away, so after your death, that death certificate has been issued, there are people that are still waiting 2 years down the line for their probate to be granted, or for the administration to be sorted out. You know, like, it takes time. But when you have your life insurance payout in trust, because it already has a will, it already has an instruction, within weeks, at times within 10 days, the payout is already gone. Then what can this money be used for? One, it can be used to pay off debts, maybe like you had a mortgage still running, right? You know that your children now have access to free houses, right? Also cash, maybe your children are still in the university. Make sure that they have money to sort out all of the other without having to go through student loans, right? And if you don't have your life insurance payout in trust, that means you don't have a control. So it may even mean that all your debtors maybe had a lot of debt, when you pass on. Your debtors have priority than your family will have. But when that amount is in trust, that trust is a priority. Your instruction is a priority. So I'll say I highly recommend, if you're watching this right now and you do not have your life insurance in trust yet, speak to me. I'll walk you through. It's a free service that I do for all my clients. And if you're watching this and you don't even have a life insurance, come on, right? Speak to me, all right? Let's put something in place for you. Because life insurance, having a life insurance, having critical illness cover, or having your income protected is your peace of mind investment. Just do it so that then you can go on and live life and do other things. However, you know that if you're unfit to work, you know that there's an income that will come to you every single month, up to 2 years, up to 5 years, or up to even retirement. That's income protection. Secondly, critical illness cover, you shall have between 1 to 2 years of your annual earning in critical illness cover. Why? In case of diagnosis, and this happens a lot, in case of diagnosis of critical illness, you know that there's money that can come in so that you can focus on getting back in health. And remember, the person that is ill is not the only person that may lose income. Even your spouse would lose some income because they may need to take time off to look after you. So why would you leave yourself in such a dire position and have nothing to fall back on? So life insurance, critical illness cover, income protection is your fallback plan. All right, that's basically. So it's all about trust today. It's for you to understand all those words. They are big words, but they just mean simple things. Settlor, you that own the life insurance. Beneficiary, people that you want this to go to. Trustee, people that you trust with money. Witness, independent of all of this, they are going to witness that you sign for it, and that's it. You send it to whoever life insurance company has given you an offer that your policy is with. They look at it, they update your system, they're still going to send it to you. Keep it very well and let all the people that are going to be your trustee aware, because they're going to keep that. They need to keep it safe, because that is you entrusting them with your last wishes on what will happen to the payout of your life insurance. I think that's going to be it today. All about trust and it's the synergy. Like I said, I'm really looking forward to all the things, all educating you, making sure that you understand all the jargons that we use within the insurance industry, and it's all to make sure that you have the right cover in place. Please invest in your peace of mind. Don't ignore this. If you don't have your life insurance in trust yet, speak to me. I'm going to be able to help you. And if you have had your policy for more than 2 years and life has different events have happened, we may need to update your policy. Let's also talk. And if you don't have anything at all, let's have a chat and then I'll be able to sort that out for you. Next week, we're going to be talking about business protection, keyman insurance, shareholders insurance. I'll be able to share some light on that. Really, if you have a limited liability company, or if you have partnership, whatever company you set up, or you're a sole trader, there are things that you can do to make sure that the integrity of a business is protected if you're not there to run it, or if you were to be ill and cannot carry out your daily duties due to that illness. All right, that's it. Over and out.